As predicted, that news conference wraps up just seconds before that press release comes out, before anyone can actually ask any questions about it. I think if we all hear TPI just one more time, our heads might explode. From New York City this morning, good morning, good morning. This is The Open. I'm Jonathan Ferro, and here's your price action. This euro move fades pretty quickly. It's a 50 basis point rate hike. It's the first rate hike since 2011. We're back to zero on rates of the ECB for the first time since 2014. And look at this rollover in the single currency. Euro dollar basically unchanged now at 101.71. Look at peripheral spreads as well. In Germany, the 10-year is basically unchanged at the moment. You have a look at Italy, we're up by more than 20 basis points. The 10-year up by 25, the 2-year up by 30. And I have to tell you, looking at spreads right now on German 10s versus Italian 10s, 237. The wide to the year, 242. We're not far off from the wide to the year just a month or so ago. The equity market here stateside about 15 minutes into the session, shaping up like this. We're down about a third of 1% on the S&P. On the Nasdaq 100, we're down a tenth of 1%. Take a listen to the ECB president, Christine Lagarde.
The combined forward guidance that existed for September is no longer applicable. From now on, we will make our monetary policy decisions on a data-dependent basis. Will operate month by month and step by step.
We'll see you in September. Mike McKee's going to break down TPI for you in just a moment. I want to cross over to Danny Berger out of Frankfurt for more. Hey, Danny.
Hey, John, it's clear that the ECB has been changed by this decision. That language from Christine Lagarde there, I think it bears repeating that this decision and forward ones will be data dependent, will operate month by month and step by step. Forward guidance, the door is closed to that. Even the September rate hike, where before they would say it would be bigger than 25, she says that's no longer applicable. I have to say, John, it is pretty remarkable that this was a clear unanimous decision, not just on TPI, but this rate hike as well. It was clear that she tied the two together. And look, Christine Lagarde over and over again in that press conference when it comes to TPI got question after question about Italy. She batted every single one of them away to one point, not even willing to say Italy, saying the country to which you referred to. She says they don't make political analysis. That's not their job. They're looking for unwarranted moves. We're getting details just now on the TPI that they're laying out, but she laid out 4 clear criteria for it. Again, she didn't speak exactly to whether Italy meets that criteria or not, but really emphasized, John, all of this in terms of who gets access to the tool is down to the discretion of the Governing Council.
Danny Berger from Frankfurt. Danny, thanks for the coverage today. I appreciate it. Mike McKee gets the job of going through that press release. Let's get over to Mike now. Hey, Mike.
Hey, John. Unfortunately for you, we don't get the answer to the question you were asking. How big is it? They say it is going to be based on the need. Rather than the need of any particular country, rather than setting out an amount at this point. It will be used for the purchase of secondary market securities issued by government agencies in the Eurozone, jurisdictions experiencing a deterioration in conditions not warranted by country-specific fundamentals, countering risks to the transmission mechanism. The scale depends on the severity of risks facing monetary policy transmission, and you've already heard that these are not going to be ex ante. It already has to have happened. The other 4 criteria that Danny was talking about is any country receiving this kind of aid would have to be in compliance with the EU fiscal framework, not deeply in debt. Absence of severe macroeconomic imbalances. In other words, it has to be not their fault. Fiscal sustainability, they've got to be able to pay this back. Their fiscal path has to be sustainable. And then they have to have sound economic policies in line with the country's commitment to the recovery fund plans. The key here is, according to Christine Lagarde, that this was all decided unanimously. The Governing Council would rather not use it, she said, but if we have to use it, we will not hesitate. So they don't tell you how much it's going to be, which might be a deterrent to the markets for pushing spreads too wide, but they do tell you they will have to use it. She's trying to say, we got the bazooka, we're not going to tell you how big it is, but we are not afraid to use it.
Mike, this might be a stretch, but this headline here, private sector securities could be considered. Big problem for the Eurozone over the last 10 years has been the link between the sovereign and the financial sector. If we are really concerned about the transmission of monetary policy, and this is a mechanism to make sure that's not impaired, would it be a stretch to say that they might consider by, say, the debt of banks in the Eurozone in that particular country?
Well, the way you read it, it doesn't suggest that it would be impossible. The question is, do they really want to do that? And they do phrase it as if it's needed. And that's going to be the question. Do we see transmission problems? And this is supposed to be the transmission system, not the underlying balance sheets, that would affect those banks or other private securities issuers. So we'll have to wait and see on that. They're not giving us enough information. It is interesting that they end this press release by talking about the PEP reinvestment flexibility that they have. And they mention the OMT, the outright monetary transactions system that they set up during the Euro crisis and have never used. So they're kind of letting people know we have all these tools. We have this new one we added to our toolbox, and we will use it if necessary. I guess it would depend on the nature of the crisis, which one they would go to first.
Interesting. Mike McKee, thank you, buddy, as always. Mike McKee got the honour, the privilege of going through the TPI press release. Flowbank's Esty Dwek joins us now, Erik Nelson and Wells Fargo as well. Esty, you've heard all of that. I hope you're still awake. Not because of Mike, but because of that news conference. I've got no idea what half of this means anymore. Esty, do you think that Italy is eligible for what's been outlined today?
I think Italy is one of the countries that they need to keep contained and to keep it within the euro. So I think they would find a way to make it eligible. From what we heard repeatedly is that there aren't so many underlying details. This is more, I think, a way of saying, don't test us, don't push the boundaries on Italy because we will react. And if it isn't the TPI, it's one of the other acronyms that they still have available. And between all of those, they will continue to contain spreads and ensure this transmission mechanism.
Erik, you've had your doubts about the sustainability of a rally in the euro. Those doubts are mainly because not of what happens today, but ultimately you think any particular rate hiking cycle from this ECB is not going to be long. Have your thoughts on that changed?
Not particularly, John. I understand the forward guidance is different now, and they've opened the door to larger hikes or potentially more 50 basis point hikes. But the fundamentals, in my opinion, have only gotten worse since June. And to me, if we zoom out a little bit, the energy crisis is still a problem. Italian politics have gotten worse. And the fact is, the ECB cannot increase the flow of gas to Europe. They cannot change the political situation in Italy. They can certainly limit euro downside, but to me, the fundamentals still point to euro downside, even if the ECB has some sway in limiting that.
Erik, the potential gas shutoff raises a really important question, and I had someone reach out to me just as that news conference was ongoing with that particular question. I think this one's important. Did we get a decent idea of the ECB's reaction function, just as far as this question is concerned, how they would respond to a negative supply shock? Have you got a decent read on that? Because if we are truly in a world where forward guidance is dead, we need to really re-establish how they're going to react to certain information. And that's an important data point for many of us. Do you understand how this ECB would respond to a negative supply shock?
Well, right now, John, they're staring at 9–10% inflation and a rate that has only just gotten back to zero. So in the absence of a very clear and already in motion recession, they're probably going to push toward more hawkishness. My question is, we fast forward 3 to 6 months, and maybe the Eurozone is in recession, and there is a real energy crisis that's actually manifesting in real time. At what point does the ECB say, this is too much, we can no longer hike rates and worsen financial conditions in the face of this economic situation? And that is what worries me about the euro outlook into the end of the year.
Esty, if you had to make a call right now for the September meeting, what would it be?
I think that the reason they don't want to make that decision is exactly about this natural gas and this energy crisis. I think this is what's weighing on them. If suddenly the flows get shut off, it's basically automatic guaranteed recession and very big dips in GDP, especially for Germany. So where you'd have one of the more hawkish countries, there's also this big question about growth and how you deal with it. Coming off of today, if the gas flows continue and inflation doesn't come down much further, so again, if the gas flows continue, they could do another 50 basis points. But if you have any kind of concern that those might stop or have been lowered even further, then I think they would want to get those 50 basis points. They wanted to get back to zero, and then maybe they have to go a little bit slower going forward because that fourth quarter and that first quarter of next year are starting to look really, really tricky.
Euro turning around a bit, euro dollar 102. Esty, I just wonder off the back of all of this, what's the trade? I'm seeing a headline like this. Private sector securities could be considered for TPI. I just wonder how many people start to take a second look at that in the coming days and wonder what that means. Esty, what is the trade off the back of this?
Well, at the moment, the euro is having the most reaction, right? The equity market hasn't been as excited about the 50 basis point hikes. And you saw this move, even the euro is somewhat undecided. It's better in the sense that it reduces those interest rate differentials with the dollar, and everyone would be happy to have a slightly softer dollar at some point. But it doesn't feel like there's so much confidence that this is going to be an aggressive rate hike cycle. And as you said, the TPI is giving a lot of different options to have that sort of dovish tilt and protect the Eurozone. And if you sort of net that out, I'm not sure how positive it is for the euro, or I'd say over the medium term.
Erik, I wanted to give you the final word. Your call on parity, a break of that within a month that you made about a month ago, turned out to be perfect. Just a final word in 20 seconds. Your next call on the euro, what is it now?
John, the most important thing here is positioning is still not stretched in euro downside. We think the risk reward still favors euro lower from here, targeting 95 cents.
Erik Nelson, there we go. Esty Dwek, looking for 95. To the both of you, thank you. As we leave the ECB news conference behind, euro dollar, just a bit of a bounce again after rolling over. Euro dollar 102. Erik Nelson there looking for 95. And if you're looking at spreads out of Italy and Germany, Italy over Germany, we're higher by about 21 basis points on an Italian 10-year, on a German 10-year. We're pretty much dead flat at 125. From New York City, this was the countdown to the open for our audience worldwide. This is Bloomberg.